Good day. This is Rick Love, the National Sales Director for the National Senior Burial Benefit Program. I welcome you to this training video. And this video is need analysis for term, universal life, and non-participating whole life insurance products. Very valuable information will be shared here. But before we begin, I want you to please like this video and the others. Subscribe to our YouTube channel, National Senior Burial Benefit Program. Thank you very much. We are a team, an acronym. Together, everyone achieves more. So I appreciate your cooperation with that. The first video was need analysis on final expense. And so now I want to delve a little bit further into the appropriate product for these other particular needs. Final expense being primarily to cover burial and monument, tombstone, and perhaps some money's left over, but not a whole substantial amount. Now, in dealing with clients who speak about term insurance, most often they will not have prior knowledge about universal life products, or some may say an IUL, index universal life, or non-participating whole life insurance products. And see, here again, this gives you a great opportunity to position yourself. Remember the video on prospecting and positioning? This gives you a greater opportunity to position yourself as the authoritative person, the expert in the insurance financial industry field that one needs to speak with. Okay? That you are the referred to, go to, send to person. Because most folks have heard of term insurance. They still, a lot of them may not have adequate knowledge of it, but they've heard of it. But certainly not many have heard of universal life, IUL, or non-participating whole life insurance product. And so, again, I can never overemphasize the need for proper product training. That's your responsibility as an insurance professional, as to learn about your profession, learn about the product that you have access to. Now, we also provide all of the agents with the National Senior Burial Benefit Program with a carrier and contact information sheet that lists all the various carriers, their issue ages, the face amounts, etc., etc. So you'll have all that knowledge right at your hand. Also, the numbers of the field marketing organizations that we work with, so they can help you with case design and case management. And then you also will have access to our regional sales trainers, Miss Rachel McKee and Mr. David Wilkins, at your disposal. Okay, so let's delve into this. Now, term insurance, you want to position this for folk who are looking for what I consider legacy building. That individual that wants to leave monies to their beneficiaries, the heirs. These folks are concerned with my spouse having money to live on, or leaving money to my children or grandchildren. I call it legacy building. And what greater way to do it than with a life insurance product is a term insurance plan. Now, one must position this product with the client having some understanding that this product will end at a specified period of time. Secondly, I want you to be equipped to talk about conversion or convertibility provisions within a term insurance product. And so most of the term products that we offer have convertibility. And so when you're doing an illustration for a client with this product, you want to make sure that you show them a term product that doesn't have conversion, because typically it will cost less money. Cost per thousand would be lower for a product that doesn't have conversion, typically with one that does. But so you want to make sure your fiduciary responsibility, okay, show them both. One may cost a little bit more than the other, but when they understand what conversion is, that at a certain age I can convert this term product, which will end, to a permanent insurance product that will last me for the rest of my life, you will find that most clients will be willing to spend a little bit more for that privilege than one that will end 15, 20, 25, 30 years from now. Okay? That's your fiduciary responsibility. And I'm amazed at the level of incompetence within this industry. Just truly amazed at it. And so I don't want anyone affiliated with us being in that predicament, okay? So term insurance, again, the lowest cost per thousand of any life insurance product you can find in the marketplace, term insurance. However, it requires a candidate that is relatively healthy. Now, we do have some insurance carriers that will grant these policies to people who fall outside of the regular parameters of height and weight and perhaps some other minor health concerns. But for the most part, they do have to be relatively healthy to get this product. And I will go over some of the carriers with you who have more liberal underwriting than some of the others, okay? And so term insurance, again, you have to establish the need, always establish the need, find the pain points, and then find out what it is that they're trying to achieve with this product. And also find their price point. See, the reason I'm doing this is because I don't want you scurrying around trying to find every illustration, every product brochure to send the client because you have become a quote engine and a product information provider. It typically ends in a dead end. You just don't get anywhere. So you want to set those parameters early about finding their pain points. Why is this so important? Establishing the need, and then finding what budget amount they want to spend to take care of this particular need. And see, that's where you bring the client back to reality. See, they watch television, and you can get a $1 million term policy for $39 a month. Well, I'm talking to someone 55 years old. They smoke cigarettes. They've been in the hospital. They own high blood pressure medication, on metformin for diabetes, and they want $500,000 policy. And then they tell me when I get down the price point, because I'm still trying to establish where we are. Well, Mr. Love, I don't want to pay over $50 a month. See, the reality is they don't know this. So I have to bring them back to the reality of cost per thousand and how that may be applicable to somebody who's 18, 19 years old with no health problem, no medications, et cetera, et cetera. But Mrs. Jones, we're going to have to revise what it is that you're looking for, and this is why. Do it in a professional manner, but you have to steer them back to what's real and what's not. Okay? Now, with the universal life policies, I typically uh, sell more of these than term insurance, and I will show them an illustration of both. Uh, the term insurance, which we know ends, some of course have conversion, and then a universal life policy that has guarantees to age 100 or age 120. The premium will remain the same, and the death benefit will remain the same throughout the duration of the policy. Universal life policies, most of the ones that we work with have other living benefits that will greatly benefit a client. Chronic illness benefit in the event of a heart attack or a stroke or cancer or some episode such as that. Uh, Organ transplant. They go on dialysis. It will pay cash benefits for that. And then you have a critical illness rider on a lot of the universal life policies. And the critical illness rider is if they have the inability to perform at least two of the activities of daily living. Most policies say for at least 60 or 90 days. Then that will start distribution of a cash benefit. That's called a critical illness rider. And you know what the activities of daily living are. Eating, bathing, toileting, dressing, clothing, continence, and also if they are cognitive impaired. That triggers an event within the life insurance policy where it will pay them a cash disbursement. So see, again, product knowledge and information. So when I'm offering this product, I'm creating value for why this product is so important. Now, I do a lot of ULs, and the reason is because I position them in such a way that, okay, this costs about $15 more a month than a term policy, but wow. And also, universal life policies build up cash value. Now, you don't necessarily get them for the cash value benefit, but it is available. And some of them also have what they call reduced paid up. Now, reduced paid up means you pay on it for a number of years, and then you can elect to not pay any more premium, and that reduced paid up will be the death benefit your family will receive upon your demise. That's also included in many of these policies. So you need to acquaint yourself and have this information up here, that when I'm speaking with people, I'm again establishing what? I'm showing empathy, I'm creating credibility, trustworthiness, and I'm positioning myself as the authoritative person in this field. Very important, very important. And so the IULs, of course, Index Universal Life Policies, mirror. Most of them mirror the S&P, the Russell, the Dow Jones, or some index within that particular insurance product to enhance the cash value. Now, one of the problems with that product, and certainly I'm not against it, but the cost per thousand is higher for that particular product. It's just a product that I will offer, perhaps show it as an illustration purposes, but I don't want you to get sold on that product in and of itself alone. Let that client see the various variations and the differences between these various products, the term, the UL, the IUL. Let them see it. And you, as an agent, your fiduciary responsibility is to have adequate product knowledge about these plans so that you can present them in a professional manner. Okay? Now, lastly, non-participating whole life. It certainly has its position, its place in this industry. Our children and our grandchildren have non-participating whole life insurance policies. Wow. Yes. Let me tell you why. We work with one carrier in particular that has the lowest cost per thousand for non-participating whole life in the entire insurance industry. And I can say that as a matter of fact because I'm able to shop and find the best product. And for those agents who are aligned with us, you will have access to this particular product that my children and grandchildren have. A non-participating whole life insurance policy, you can do a 10-pay. 10-pay, you pay on it for 10 years and it's paid up for life. Or 20-pay, you pay on it for 20 years and it's paid up for life. And you also have plans that you can pay up to age 65 and it's paid up for life. All these products are available. But for folk under the age of 20, typically I'll put them in a 10-pay whole life. Certainly children. 10 years is paid up. Don't have to worry about it. It's done. It will continue to build up cash value. But now I also have older adults that I'll put in a non-participating whole life because they like the fact that it's going to last for the rest of my life. It builds up substantial cash value. And it's just a great product to have in your arsenal. Now, a non-participating whole life costs less per thousand than a traditional whole life insurance policy. The underwriting is more stricter, so it's for people who are relatively healthy, and otherwise they probably wouldn't be able to get it. Because remember, final expense whole life plans typically are what they call simplified issues, so the underwriting for those products are very liberal. Okay, so I'm going to conclude this training with the fact that term insurance certainly has its place, legacy building, leaving monies to pay off mortgages, creating college education funds, etc. Know the position for universal life policies and how to position it to show the illustrations for both. The IUL certainly has a place. And then the non-participating whole life insurance has its place. And if you have questions about these products, I want you to not hesitate to call me at 888-655-4866, 888-655-4866. I want you to also go to our website, finalexpensekingdom.com, finalexpensekingdom.com, and also the National Senior Burial Benefit Program.com. Thank you for listening, and may God bless you in all your efforts and endeavors.